What's up everyone, it's Scotty with Money Investing. In this video we are going to be talking about one more cybersecurity company that is going to be reporting their earnings next week, and that is going to be none other than Zscaler, and one of my favorite companies in cybersecurity space. But of course I don't own any companies in cybersecurity right now because of the valuation, because of the prices that these companies are trading at. So we're going to take a look at this company. We're going to do a complete analysis. We'll talk about the earnings expectations for the upcoming earnings, revenue, cash flows, valuation, balance sheet, and of course the intrinsic value, and where is the actual fair value for this stock as well. So hope you guys enjoy this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. Couple announcements: 16% annual discount on our Discord does expire at the end of this month, so there's a few more days left, and after that it is going to go away. You get access to all the buy and sell alerts, options alerts, trade ideas, all the private benefits, including all the private member live streams as well. And the fundamental and technical analysis courses are currently on sale, 60% off in observance of Memorial Day weekend, and the coupon code is going to be Memorial if you want to take advantage of that as well. And then not to mention the Money Investing Reads channel. We've got a brand new channel focused on books and book reviews and summaries on all genres, not just about the markets or investing, but of course philosophy, psychology, and a lot of other topics as well. So link's going to be down below if you want to subscribe to that channel. Our first video is already out. I would really appreciate you guys. So the company that we are talking about again is going to be Zscaler. In fact, we did have a trade idea on this company not too long ago. It had a very nice reversal of over 55%. So that's how much it's pushed higher since the beginning of March. It's rallied quite a bit, but of course it is still down substantially from its all-time highs of well over $370 per share, still down over 65%. Now going over to the actual numbers, and again, before we do that, let's talk about the earnings expectations here. So this right here is going to be when they're reporting numbers on June 1st, which I believe is a Thursday, and EPS on a normalized basis is going to be 42 cents per share, with the GAAP number at negative 33 cents per share. So the company is still unprofitable on a GAAP basis, but non-GAAP basis, it is expected to report some profitable numbers or earnings of 42 cents per share on revenue of just about $411 million, and 29 analysts have revised the company's earnings to the upside in the last 90 days for the business. If you take a look at the numbers here, consistency is the name of the game here. And for Zscaler, every single quarter they have reported year-over-year growth of 60 to 50%. Very strong top line growth here for the company, not just in revenue, but of course in quarterly billings as well. Every single quarter, year-over-year growth of about 40, 50, 70% for the company, and this right here is going to be more on an annual basis. This right here is the serviceable users that they are foreseeing about 335 million, and serviceable workloads about 150 million, and this is going to be their total TAM, or total addressable market, or serviceable market, of $72 billion, which again includes a lot of workload SAM and user SAM, and of course commercial segment B2B users as well. Now going over to the actual numbers, again, revenue has gone from $53 million from 2015 to over $1 billion, so that's 20x growth in revenue. And gross profits has also grown to 850 million, so that's about an 85% margin for the business. But of course, operating expenses are so high that operating income is indeed a loss. It's an operating loss of about $326 million last year, and that's really been the trend. Every single year, the operating losses are ballooning, getting even bigger and bigger. This right here, net losses every single year. So last year it was just shy of $400 million, and shares outstanding are also increasing from 23, 24 million to now sitting at just under 143 million shares outstanding. This right here are the margins. Again, very strong gross profit margins, but everything else is abysmal, with EBITDA margins negative, net income margins are negative, free cash flow margins are still pretty strong, 36%. But capital efficiency, asset efficiency, very poor at negative numbers, because of course the company is generating net losses every single year. Balance sheet is fantastic. They're sitting on well over 1.9, almost $2 billion worth of cash, with a little bit over $1.2 billion of debt. So net debt is negative at negative $689 million. So that's good, that's solid. And current ratio, quick ratio also at above 1 for the company. In fact, almost at 2, in some cases over 2 for the company. Valuation, pretty expensive, trading at 11 to 13 times sales right now. So no doubt it is trading at a very expensive valuation relative to its peers, relative to the entire market. And of course, on a non-GAAP basis, forward earnings multiple at over 83 times earnings at the moment, because I think the EPS estimate is about $1.56, and right now it is trading at about $130. So again, if you do the math, $1.30 divided by $1.56, 83.3 times forward earnings right now for the company, which is incredibly high. But on a non-GAAP basis, they are expected to grow earnings by about 125%. So I guess the growth rate can or maybe justify the actual valuation, but for me personally, again, no growth is enough to justify an 80 times multiple on the earnings. So going over to the actual intrinsic value calculation, if you take into account what the numbers are projected to grow for Zscaler, it is expected to grow from $1.56 to over $4.85 over the next 4 to 5 years, right? That's going to be a compounded annual growth rate of 32%, 32.7%. And we're not going to plug in that number, right? It's going to be way too high. And this right here is the share dilution since 2019. The reason I'm going off of 2019 is because they obviously started off with a very, very low base. So I don't want to go off at 23.5 million because that's going to really, throw us off in our estimates of how much share dilution we can expect from the company in the future. And that's why I'm going off of 2019 numbers of about 123 million. So that's about 3.69%. So I've just kind of plugged in 3.75% just for a good measure. That's going to be the share dilution every single year for the company over the next 5 years. Now, in terms of growth rate, I'm going to go with, let's say, 28%, right? 20% is very, very optimistic. It is very much on the higher side. You guys know me. I keep my growth rates somewhere between 5 and 30%. When I'm projecting out earnings or net income for any company, very rarely would I go above 30%. And even 30% is my most optimistic scenario. So for Zscaler, we're going to go with 28%. P multiple, I'm going to keep that intact, roughly around 30, to keep that PEG ratio as close to 1 as possible. 12% discount rate and 10% margin of safety puts our fair value at $69 per share, with the market price right now obviously trading at about $130, makes Zscaler no doubt extremely overvalued. And that's exactly one of the reasons why this was only a swing trade when we originally took a trade on this on the upside, and it never has been a longer term investment because of the valuation, right? So one of the things that we always have to remember with valuations is, right, when the prices are going higher, what is going higher? It's a simple question for you. When prices go up, what goes up? Risk or return, right? Pause this video and answer down below. If prices keep going up, what is going up with it? Is it the risk or is it the future return? So pause this video, answer down in the comment section below, and once you've come back, the answer is risk, okay? When prices go up, risk goes up with it, and prospective returns, future returns diminish, right? When prices go down, that's when risk starts to come down and future returns start to go up, right? That is a very, very good way of looking at asset values and just prices in general, and trying to understand when the market are swinging to one extreme or the other, right? When prices are way too high, right? More people are more encouraged to buy. They are very enticed. They are very optimistic. There's a lot of bullish narratives being drawn, and prices are being bid up to extreme levels. And that only diminishes future returns in the future, right? It's just basically simple logic. And risk also starts to increase in that environment. And same is true on the other side. When the market swung too far on the other side, when there's too much bearishness, selling pressure, prices are going down, they're becoming so depressed that prices are now trading below their intrinsic values. Well, guess what? Risk is really, really low, and the potential for future returns is substantially higher. So that's really where the focus is for us, at least on the channel, is trying to understand the valuation, because as I mentioned before, there's no one company out there that's just too good at any price, right? If you think of any company out there that you're willing to buy regardless of the price, then you have to really rethink your analysis on that company, because there's no company out there that I'm willing to buy regardless of the price, okay? You can buy, like I said in my previous videos, right? You can buy great companies at the wrong prices, and that can be a terrible investment, or you can buy wrong companies at the right prices, and it will also be a terrible investment. Our goal is to find the right companies at the right prices, okay? That's the goal. And for Zscaler, unfortunately, it's not the case right now. But again, that's my fair value, and we're going to be keeping a close eye on that company. For now, support resistance, $88, $88, $80 is going to be that support level right here, and resistance is going to be at 144. That's going to be in line with that 300 simple moving average. So very strong resistance there, in line with that previous level as well. And of course, we got the RSI and the MACD incredibly overbought right now, so it's going to be quite interesting how the stock price trades after the earnings come out. But resistance is going to be closer to 144 at the moment. So I hope you guys enjoyed this video. Find it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below if you're interested in joining us. Don't forget 16% annual discount available till the end of this month, and the 60% discount on the fundamental and tech analysis courses, over 80 plus lectures and 16 plus hours of content on Memorial Day only, and that expires tonight. Coupon code is going to be Memorial. As always, happy investing. I'll see you all in the next video.